Hey everyone, me Kevin here. Let's talk about Affirm. Affirm just destroyed earnings today, absolutely crushed it. The stock is up 20% in after hours. I've got $600,000 invested into this stock, and even though I hedged my position in this stock, I am jumping up and down because this is such a phenomenal company. And I could not be more excited with what happened here. So first, what I'm gonna do is I'm gonna give you a quick synopsis of what Affirm is. I've already done a very detailed video on why I'm investing in Affirm, so I'm not gonna rehash all of that. I'm gonna give you a quick little synopsis. I'm gonna talk about what happened with earnings today, what changed for the future, and what my position is now going forward as an investor. Am I going to make any changes? What's my perspective? What am I going to do? Okay, ready? Let's go. First, Affirm is a buy now, pay later platform. Basically, it's trying to replace your usage of a credit card. Now, I'm gonna preface my explanation of Affirm by saying I personally think anytime you buy something, you should pay it off the same month you buy it. You should not buy an iPad and then buy it and pay later for it. I think you should pay it off in the same month you buy it. The same thing with a Peloton, the same thing with really anything but real estate. The only thing I wanna see you making payments on is real estate, okay? That is from me, from a personal finance perspective, okay? Now I'm gonna take away or sort of put on a shelf my own belief of what you should do with your personal finances. And now we're gonna put our investor hat on and look at a company that's making a ton of money, a killing in terms of money, by offering people a more affordable option than a credit card. And that's called buy now, pay later. So for example, if you wanna buy an Amazon Fire TV in the future, since Affirm just announced a partnership with Amazon, which is currently in the testing phase, we don't have a lot of details about it, and that's part of the crazy part, is Affirm is skyrocketing without even having any revenue projections on the Affirm Amazon partnership, which is nuts. But anyway, let's say you wanna buy a new Amazon TV, $500. Hey, do you wanna pay that $500 now on a credit card and potentially pay 20% interest on your credit card? Or would you rather make monthly payments or a payment every 2 weeks for $25 or $12.50 and just make those payments for 20 periods or 40 periods or whatever. Spread your purchase out over multiple monthly installments for absolutely zero interest. Well, a lot of people are gonna go, yeah, sure, sign me up for that. Zero interest. As long as I make those payments, I can have that new TV. Let's go. What's gonna happen? Amazon sales are gonna go up, my expectation. People are gonna spend way more money. This is why on the personal finance side of things, I think it's a very, very bad idea to do this because you're gonna spend way more money. But from an investor point of view, I'm like, oh my gosh, people are gonna spend more money at Amazon. Amazon's growth is going to go up, and Affirm is going to partner in that growth. Affirm is like a cheap way to get your hands on growth at Amazon. And we're gonna talk about moats and competition in a moment, but I've been wanting to get my hands on Amazon growth for a very long time. But the problem is it's like $1 trillion plus company, and it's kind of like a Goliath. Like law of large numbers makes it really hard to move. Affirm is a $24 billion company. In the grand scheme of things, it's still half the cost of Coinbase, okay? And Coinbase ain't even doing that hot right now. So I'm very, very excited about Affirm. And I'm so overly excited. One of the folks who works with me says, Kevin, I have not seen you this excited about a stock since Tesla. And that's kind of because, in my opinion, this is the Tesla of finance. And like even more so than SoFi or the other companies that I'll like sell puts to get into or whatever. This is something where I'm like, no. I really, really, really like this. This is great. Now, why? Why do I like it? Well, again, the reason I think people are gonna go nuts for using this service is because as long as you make the timely payments, that is, you agree to make 20 monthly payments to pay something off, and you don't need an extension, you don't pay any interest. It's super transparent about that. You don't pay interest if you make your payments, which is awesome. That's gonna make more people sign up for this. People pay interest if they need more time or extensions and there are no late fees, but then you pay interest if you need more time, right? If for whatever reason, you pay it off, you don't pay any interest. So it's a win-win for you, but it's also a win for Affirm because rather than your credit card taking that 2.9% processing fee every time you swipe your card, Affirm takes that processing fee. So Affirm makes money off the transaction up front. And then if you pay interest in the future, they'll make money off that interest if you end up needing to pay interest. Those are their two primary sources of revenue. But one of the reasons I call them the Tesla of finance is they just recently announced an Affirm savings account, and all they did was do a little bloop on their app, the Affirm app, and they got $600 million in savings account deposits. And I'm like, whoa, okay. They spent literally $0 and got a ton of savings deposits. Hold on, let me just make sure really quickly that was 300 million. I overstated that a little bit, and then I started thinking about it in my head. I'm like, wait a minute, that was the wrong number. Sorry, $300 million in deposits. Sorry about that. But anyway, $300 million in deposits, and they spent $0 in advertising. That's like Tesla. It's crazy. But what's also crazy is their future projections for new products. So consider this. I went into their earnings call and I read through their earnings call transcript. And what they really want to do is they want to get people off of ever using credit cards. They call this a credit card alternate, which people in general don't like credit cards. Credit cards have a bad reputation. Now, a lot of us on YouTube were like, but you could get your credit card rewards points, whatever. Most people in society don't think credit cards are a good thing. Now, the downside is it's kind of like you're signing up for a reverse debt snowball because you're just building up more and more debt and you're probably likely to spend more money, but that's a personal finance problem. That's not an Affirm problem, right? So like this to me makes me want to use Affirm to sell, for example, my courses linked in the description down below. If you check out through PayPal on my courses, you can make payments over like 4 monthly payments, or you can make installment payments with PayPal. But I really want Affirm because if you could use that 40% off coupon code that's expiring on September 24th and use that coupon code to get hundreds of dollars off the courses link down below on building your wealth and pay off that over 24 payments instead of 4 payments like with PayPal, that's awesome. Like, I really want Affirm. This is great. So I think every merchant's gonna wanna use Affirm, and we're seeing merchant numbers explode at Affirm. It's really, really cool. But this is really cool what they're saying here. Look at this. The next frontier at Affirm is the unbundling of daily spend, including groceries, restaurants, and incidental purchases, excuse me. Like, they literally want you to have an Affirm Debit Plus card to where when you make transactions, you can link your bank account to this card, and you could choose, do I just want to pay it in full now, or do I want to buy now, pay later, whatever transaction? Like, I could literally see people going to a fancy restaurant, a couple $100, I don't know, go to the Lure Fish House or whatever and get yourself a bottle of wine or whatever, right? And then make payments on that dinner over like 18 installments. Like, what? It's again, personal finance-wise, horrible. Company-wise, this is insanely brilliant because you could just put everything on your Affirm card and then go on the app and go, yeah, I'll buy now, pay later that. Okay, I'll pay that in full now. I'll pay later that. I'll pay later that. I'll pay later that. And it's just like, that has not even been priced in yet because they're just now testing this app. And this, in my opinion, and they're just now coming out with this credit card, this, in my opinion, is not even considered by Wall Street right now. It's totally insane. I'm so excited about Affirm. I gotta dampen my expectations a little bit here because I'm too excited. But let's do this. I gave you a little bit of an overview of Affirm here and some crazy things going on. Let's now look at numbers really quickly, and then let's look at the future. But I'm going to keep numbers brief and basic because numbers get boring really easily, okay? All right, so first, it's worth noting that only 9% of Affirm's revenue actually came from Peloton this quarter, which is really good because everybody originally saw Affirm as just a Peloton company, but it's much more than that. In fact, if you look at their product mix right now, they literally do a bit of everything, which is really good. Look at this: fashion, beauty, sporting goods, equipment, other, home, lifestyle, travel, ticketing, electronics. Look at this pie chart. Like, this is a very nicely diversified pie chart. I really like this. And then in terms of the actual transactions, 38% of the transactions that they're doing right now are 0% interest, which most of them start as 0% interest. But if you need to extend, they go into interest bearing. There are also cases where I believe if your credit doesn't meet the requirement for 0%, I believe you could also be, have an interest bearing account or an interest bearing loan. But I've not gone through that process myself because my credit is frozen and I can't sign up for the darn Affirm app. I gotta unfreeze my credit. I highly recommend you freeze your credit. If you type into YouTube, Meet Kevin credit freeze, you'll learn all about it. It's highly important. Very safe thing to do. And it's free to do. Well, in California, it's free to do. In some states, it costs $10 per bureau to do it, and then $10 again to unlock. Watch the video. But anyway, what's really, really exciting is not so much the numbers this quarter, because the numbers this quarter came in decently. Look, revenue beat expectations. It came in at 261.8 million versus the 226 million expected. So you had a beat on revenue. Loss came in a little larger than expected at 48 cents per share versus 29 cents expected. And that initially led the stock to actually go down. But when people realized that the loss was only wider than expected because of stock-based compensation, which is like paying their employees like a one-time kind of bonus or whatever, the stock skyrocketed. It went up 20%. And the reason for that is they went from 11,500 merchants in quarter one to 29,000 merchants in Q2. That's almost a 3x. That's insane. They are the provider for Shop Pay, which is a Shopify, the Shopify network. If people want to check out with Shop Pay, Affirm does that. It's branded as Shop Pay, but Affirm does that. Their transactions per active customer are flat from Q1, but a year over, they're up from 2 transactions per customer to 2.3. And once they roll out that Debit Plus card, I expect this to go to like 5 on average. I think this is gonna double. People are gonna get addicted to using this. I think it's gonna be very bad for people's personal finances. But in terms of like, and there's like this a little bit of like that ethical balance, but like people who are going to borrow like that, I personally think are better off borrowing with Affirm than using a credit card. So I think if anything, that might be a justification for saying like, oh, it's okay, Affirm's okay. But look, this is going to be dangerous for people. People are going to load themselves up with so many monthly payments. It's going to be nuts. Again, personally, don't recommend that. But I also don't recommend buying a Tesla, and I'm a big investor in Tesla. That's because I don't think you should waste your money on a stupid car, but people are gonna do it anyway. Like I keep seeing all these Instagram posts of like really young people who finally just got their first $30,000 and they blow it all on a Tesla Model 3, and I'm like, should have bought the stock instead. But whatever. Anyway, their active customers, they literally exploded in Q2. They had a 31.4% gain. They went from 5.4 million monthly active users to 7.1. Their gross merchandise volume didn't go up that much. It went up from 2.3 to 2.5 billion, which works out to about 8.6%. We are seeing average ticket volume come down, which is actually a good thing because you don't want Affirm to only be considered that thing you use for high ticket purchases, like a Peloton bike. You want it to be like your everyday driver, like, oh, $100, let me divide that into 10 interest-free payments, right? That's really what you want to see Affirm because you want Affirm to have more transactions. You want Affirm to be used for like everything. There was a survey that was reported in CNBC where they mentioned that they did a survey and asked Amazon users, hey, would you use Affirm for your Amazon purchases? And 20% of people who responded said they were very likely to use it, and combined, 50% of people said they were very likely or likely to use Affirm in the survey. That's because there is no buy now, pay later option right now with Amazon. You could just have the credit card, gift card, or bank account that you can pay through. And Amazon tends to keep their checkout process pretty simplified to where I would not expect them to have multiple different buy now, pay later vendors. I think they're going to test this, which is what they're doing now, negotiate a deal with Amazon, and the gross merchandise revenue or volume that Affirm processes is literally just going to explode. It's going to be insane. I'm very excited about this. In my first video where I broke down Affirm financials, I mentioned that Amazon, okay, get this, okay, Amazon, well, let me give you a better comparison first. Peloton sold like $600 million in bikes in the last quarter, about $1 billion in bikes in the first quarter. Walmart has online sales of around $13 billion per quarter, okay? So just combined, that's like $14 billion, just Walmart and Peloton, right? Amazon does 54 billion. 54 billion, that's like 4x in quarterly rev. And that was just last quarter. That's not even like the holiday season. Like this is insane. And this is going to ramp up for the holiday season, okay? Like I am jumping up and down over this company. So those give you some of the numbers in terms of why the numbers are so exciting right now. And none of their forecasts, which their forecasts are just mind-blowing, very, very good forecasting numbers. None of their forecasts at this point include any kind of growth expected on Amazon. And they are expecting in fiscal year 2022, which starts now actually, they go from July to July, messy calendar. But anyway, their expected year over year gross merchandise value, they're expecting a growth of 50% based on forecasting, not including Amazon, which is just like, They are growing insanely. This is why I threw $600,000 into this company. Now, I'm going to talk about my hedge in just a moment, but I want to say this is very, very good. Their advertising revenue, oh yeah, this was interesting. Their amount of advertising, not advertising revenue, but the amount of advertising that they spent, it was slightly up. Yeah, but here you go. They increased their marketing spend, their sales and marketing spend, by 6% per quarter. So quarter over quarter, they spent 6% more on marketing, but they doubled their revenue, which is really good. Like, what you don't want to see is like a 30% increase in advertising and a 10% increase in revenue, right? That would be really bad return. They're doubling right now. Just, we want to make sure that's sustainable, but this is very, very, very good. Going through the rest of their earnings call notes, they mentioned they're really in the early stages of their partnership with Amazon. They're still testing. They expect Peloton to moderate in terms of sales. I have 100% sold out of Peloton. I sold out of 98% of my shares before their last earnings when they fell. I sold the rest today because they had soared a little bit. And the reason for that is prices going down, sales going down. Before even this earnings call, we already knew their sales were going down. Before the Peloton earnings, we knew their sales were going down. Their website traffic's down. Their search trends are down. Like, everything's down. I'm not saying Peloton's not a good company, but they're very pricey for growth that they're losing right now coming out of this pandemic. And I'd way rather throw all my money into Affirm. Like, this is very, very, very exciting to me. They're still testing with Amazon, so there's still some work to do. I think they're going to have a moat with Amazon because I don't think Amazon's going to bring anybody else in, and I don't think that Amazon is going to replace Affirm. If anything, they would just buy Affirm out, but I don't think they want to be in finance, quite frankly. That's why they've been outsourcing. Again, they brand themselves as being the replacement for credit cards, and now I'm going to talk, now that we've kind of gone through sort of an intro in terms of what's going on. We've gone through how they work, the numbers, projections for the company in terms of growth we're expecting. Let me now just touch on my game plan for the company, and then we're going to wrap this up, all right? So my game plan. Right now, easiest thing to do, honestly, is just pull it up. I have a couple options contracts on this, which are not going to do very well. But I have a ton of shares on this. So I'm going to show you what I have. Okay, so let's pull up Affirm right here. There we go. Okay, perfect. So we're going to throw this up on screen so you could see exactly. I'm a big fan of being 100% transparent with my audience. So this is just my Webull account right here. So at the very top, you're going to see I bought a Dave & Buster's call option. You're going to see that right here-ish, if I can figure out how to place my hand right there. That's going to print 10 Ds tomorrow. That's $30,000. It's already up $5,000. Tomorrow when the market opens, because the stock's up like 6%, this is probably going to be up like $15,000 in total, which is great because I'm going to lose a lot of money right here on these two things. I have an Affirm covered stock and an Affirm put. I know. Why would I have an Affirm put? Because I was hedging. I hedged my position on Affirm because I swore to myself, people are going to be overly optimistic about the Amazon revenue, and we're not going to have any Amazon revenue here yet. They're probably not going to talk about Amazon revenue. And I was right. They barely talked about Amazon. They said no guidance on Amazon, still testing Amazon, no details on Amazon. But even without Amazon, they crushed it. They totally crushed it. So my hedge options here are going to lose money tomorrow. A lot of money. I expect this. Where is it? See this $29,000 put right here? I expect that to probably be negative $20,000 tomorrow. And I expect my covered call right here, instead of being positive $22,000, to probably be negative $20,000, or at least negative $10,000, or something like that. So I expect to be down somewhere around $20,000 to $40,000 tomorrow on my Affirm contracts. I'll be up about 15 on my Dave & Buster's contract. But look at the stock. And the stock has already updated because of after hours. The stock's up 107 grand. That's amazing. And a lot of that here in after hours. So the stock is up to $107,000. A ton of that up right now. And look, I'll take 100 grand and then shave, 20 or 30 or even 40 off as part of my hedge. That just didn't work. The put and the call, they didn't work, so I don't mind closing those out. Now, if I get exercised on the call, that'd be best case scenario, but they're not going to do that. That would be stupid because they'd give up all their extrinsic value. So what I am planning to do is I'm planning to tomorrow see if we get any kind of drop in this 20% gain on Affirm stock. And if the stock goes down at all, I'll close my options. I'll just TA. I'll close my options at that point. It's possible some enthusiasm will wear off by Monday and maybe the stock drops more. Close out the options then. It is, however, also possible that Affirm just stabilizes and strengthens, because personally, I'm very excited about Affirm. I don't really care that my hedge didn't work because the stock did great. Like, I am way up on the actual stock on Webull here, and I'm going to throw more money at this company. I would be willing to take the other cash balance that I have in probably in M1 Finance. I've got about $300,000 over at M1 Finance, and then I've got a cash balance of about $200,000 at Webull. I'm willing to take that and potentially just throw it into Affirm and just buy and hodl this stock. This is not a stock that I really want to play options with anymore. I hedged my position, shouldn't have done it, but that's just the nature of hedging. Look, if the stock went down, I would have lost a bunch of money on the shares, but I would have printed 10Ds on the options, right? The stock went up, I'm making more money net, so it's still a win-win. I'm very bullish on the stock. I was just not excited about this earnings. I thought this earnings would have been bad. I was wrong. So I recognize I make mistakes sometimes, but hey, big scheme of things, this is best case scenario. The company that I went really heavy on is crushing it. I am up on my position, like really nicely up on my position, and I want to make this one of my top 5 stocks. I'm very excited here. I really hope I'm not getting too emotionally involved. I don't think I am, because if I was so emotionally involved, I wouldn't have hedged this stock in the first place, because I would just be like, oh no, I'm all in on that stock, right? I just wouldn't have hedged it. Like, I try to be reasonable with my investments to kind of protect from both sides. Again, in this case, best case scenario happened. I made more money. The company I believed in so much is doing very, very well. I just like tempering my enthusiasm by also taking advantage of, hey, if I could sell a call and make some money, then I'll do that. So we'll see what happens in the stock. I'm really going to monitor this over the next few weeks. I am tempted to potentially just buy, say, $150,000 tomorrow, just to increase my share position a little bit. And maybe if it dips next week or in the next few weeks, if we get dips, especially if we get back under 100, just kind of keep bumping this position so I could get this position to a 7-figure position. Because what we heard today, very excited. Very, very excited about this company long run. I'm more excited about this than any company that I've been excited about, with the exception of Hippo. We got pretty excited about Hippo. That's done very, very, very well too. Like, the last few big plays have just been absolutely phenomenal. So very excited. As usual, if you want to know all of my trades, everything I'm doing, all my hedges, everything I'm doing with options, crypto, whatever, join Stocks and Psychology of Money, link down below. Use that coupon code. And folks, we'll see you in the next video.